Hey, what's up, everybody? Perhaps you're a big Dave Ramsey fan, and so you're trying to pay your house off as fast as possible, but you want to know, how is paying my house off going to interact with my minister's housing allowance? Then you're in the right spot. We're going to jump into some numbers and do a couple of different scenarios, one with a family of four, two kids at home, another with a single individual, and we're just going to see how paying off the house would impact the net effect of kind of cash in your pocket as well as the taxes that you owe on your tax return. So I'm going to put up some numbers here on the whiteboard so that you can follow along with me. First, we're going to start with that family of four. So I've got the notes here in front of me as well, so I'm going to look down there at those. So family of four making gross $75,000, which includes minister's housing allowance of $25,000, which means that your taxable portion of your income is just $50,000. That's the $75,000 minus the $25,000. Your mortgage payment, the total payment that you pay to your mortgage company, is $1,500 a month. Of that, $235 is escrowed, property tax, and homeowners insurance, which means that the loan portion alone is $1,265. Utilities, let's put it $3,600. And your other expenses, maybe ongoing maintenance, cleaning, repairs, is $3,400 for the year. Obviously, that utility number is annual as well, not monthly. So when you go to do your tax return, I'm going to assume here a very basic tax return where this is all the information that we have. It's just the W-2 income from your pastoral or missionary job with the MHA and your two kids who are under 17 and qualify for the child tax credit. So if we walk through your tax return, again, your minister's housing allowance is not going to be subject to income tax. I'm also assuming here that you take the standard deduction because most people nowadays are taking that since it increased significantly a couple of years ago. Your income tax would be $2,051. The child tax credit for your two kids would offset that completely, and your income tax would be $0. Now, as a self-employed pastor or missionary, you are self-employed for tax purposes, and so you pay SECA, or the self-employment tax, on all of your wages. That includes the MHA piece. Now, this is a big piece that a lot of people misunderstand and get wrong, and it ends up costing them a lot of money in taxes and penalties. I have another video on that, so you can look for that. I'll try to put the link up here too for you to be able to jump over to that. But for now, your self-employment taxes are $10,597. You have some additional child tax credit that is refundable because we didn't use up the full portion before. So that's $1,949. Now your total tax, that's income tax of $0 plus the self-employment tax minus that additional child tax credit, is going to be $8,648. That's your total tax. Now, if you haven't paid off your mortgage and you're a few years into it, I just kind of ran a normal amortization schedule here. You're going to be paying somewhere in the $2,000 to $4,000 a year in interest. So you're going to be paying down your principal on your loan, but you're also going to be paying $2,000 to $4,000 of interest to the bank, which again is cash out of your pocket. So we need to add that loan interest to the amount of taxes you're paying. So the $8,648 plus that $3,000 is going to be $11,648 that is kind of out of your pocket in taxes and interest on your mortgage. Now, if we jump over and say, okay, what happens if we pay this mortgage off? All right. Well, if you pay the mortgage off, so you no longer have the $1,500 a month of mortgage payment because the mortgage is paid off, $1,265 of that per month is going to come, is no longer going to be spent by you on housing expenses. You'll still have the property taxes and insurance, you'll still have the utilities, and you'll still have the other repairs and maintenance that you can use to qualify for your minister's housing allowance. So there'll still be a portion of that where you're getting a benefit of MHA. But that big chunk, that $1,265 that was for the mortgage payment alone, now that you've paid that off, you will no longer have that. So your income taxes will go up because more of your income will be in your taxable income. So that $3,869 is now your income tax. The child tax credit, again, we're not using the full amount, so we still have some available. So $3,869 is going to fully offset your income tax again. It's going to bring your income tax to $0. Your self-employment tax is the exact same because MHA is subject to self-employment tax. So it doesn't matter if that number goes up or down. you're still charged self-employment tax. You still have to pay the self-employment tax on the full $75,000 of your gross wages. So that's still $10,597. Your additional child tax credit drops to $131 because we used more of it earlier in that $3,869 number. So that drops to $131, bringing your total tax to $10,466. So if we stop there and we look at the comparison, it looks like having the mortgage clearly is going to save you almost $2,000 here in taxes because of the additional benefit of that minister's housing allowance. However, you now have paid off your mortgage. So you're no longer paying interest to the bank. And that, again, that's money out of your pocket that you don't get any benefit for. So we have to now, we add $0 of interest instead of $3,000 of interest. So kind of the total cash out of your, your family budget, the cash out is now $10,466 as opposed to the $11,648. So in this particular example, by about $1,200 a year, it is more beneficial to go ahead and pay off the mortgage. Now again, based on your particular circumstances, that mortgage interest might be higher or lower. You might have some other things going on in your particular tax situation where you have some other income or other deductions, or you're able to itemize. And so all of these numbers are going to be fluid and they're going to be specific to you. But in this particular example, it would actually save you money to go ahead and pay off the house, even though you're losing some of that taxable benefit of the minister's housing allowance. All right, let's jump over to a single individual, and it's going to be very similar, except they don't have the child tax credit. So we have a smaller, less expensive house as well here. So your gross wages are $35,000. Your minister's housing allowance is $16,000. Your mortgage payment is $1,055. Your property taxes and insurance are $210. Of that mortgage payment, your loan portion alone is $845. Your utilities for the year are $2,700, and other repairs, ongoing maintenance, and expenses are $640 for your home. Income taxes will be $433. Of course, no child tax credit because you don't have children or dependents. Your self-employment taxes on the full $35,000 is $4,945, and so your total taxes there are $5,378. Now, on this mortgage, a few years into it, we're going to say that the average interest per year is going to be about $1,500. So your total out of pocket is $6,878. After you pay the house off, income taxes go up because your MHA piece comes down, so less of your income is excluded from income tax. So your income tax goes up to $1,543. Your self-employment tax stays the same again, $4,945. So again, total taxes, $5,378 versus $6,488. Looks like it's better to keep the mortgage and you save some money by having a higher minister's housing allowance. However, mortgage is paid off. We now no longer have interest that we're paying to the bank, so we don't add in the $1,500. And now $6,488 is a little bit less, about $400 less than the $6,878. So total out of your pocket to taxes and interest to the bank is going to be better if you actually pay the house off. So you can go ahead, continue to follow that Dave Ramsey plan, pay the house off, and know that financially it's not going to end up costing you in the long run any more because of your decreased minister's housing allowance. I'll say it again, this is very specific. We went with a very simple return here. I used, I think, 3% interest on the mortgage here, and I went kind of in the later years, which is typically when you might even have the opportunity to pay that off unless you just got a large gift or an inheritance where you could pay it off earlier in the mortgage. So that's how I got that mortgage interest rate there. Again, that mortgage interest is going to be even higher in the early years. So if somehow you're able to pay it off through an inheritance or something in the early years, that mortgage interest piece is going to be significantly higher, which is probably going to benefit going ahead and paying that house off, even though you lose some of the MHA piece. Now, if you're later in your career, you're about to retire, your house is almost paid off anyway, but of course your mortgage payment stays even throughout all that, so your MHA is still even. As soon as you pay that off, that's going to go away, and you're thinking, I want to refinance in order to not lose the benefit of minister's housing allowance. Now, I do have another video. I'm not 100% sure if we're going to post it before or after this one, but eventually there will be a link here, so look for that, and if not, go ahead and subscribe, hit the bell, so you get notified when that video comes out. But if you refinance and take cash out, so that basically is a refinance where if you owe $50,000 on your house, you refinance for $200,000 and they give you the additional $150 to either do repairs on the house, pay off other debt, or whatever. If you refinance, you need to be very careful and look at what you use those funds for. It may or may not qualify. The payments that you're making on that refinance, a portion of it, all of it, or none of it, may qualify for minister's housing allowance. So make sure you check that video out. And the last thing I'll say here is, okay, let's take the example of someone who is not in Social Security and Medicare. Maybe you have opted out. That is possible. Some ministers have opted out. Because that Social Security and Medicare piece stayed even, basically we just take that out and it still, in these particular instances, would be better, would save you about the same amount of money to go ahead and pay that mortgage off versus keeping it simply for the tax purposes of minister's housing allowance. So what you need to do here is realize that here's a good example. This helps you think through the impact of your taxes plus the interest on the home. It kind of helps you think through, well, what do I need to be paying attention to? Because a lot of times people might think just about the tax and not that interest piece on the mortgage, which was a big swing factor in which one was better. But this was a very simplistic analysis. You need to make sure that you find a tax advisor who can help you walk through this if you're considering this. My name's Brad. I'm with Wooten CPA. My goal is to bring peace to your finance and tax responsibilities. I have a significant number of clients who are pastors and missionary. I'm very familiar with minister's housing allowance. Would love to help you do this analysis if you're in this situation. So please reach out if you need any help. Again, don't forget to subscribe and hit the bell so you're notified when those other videos come out. Thanks for watching.